Hey, what's up everyone, and welcome to the School of Personal Finance. So 2021 officially in the books. I always enjoy going back and looking at the final performance numbers for a bunch of different assets that we had the opportunity to invest in throughout the year. So in this video, I'm going to walk you through a couple different stocks, bonds, mutual funds, ETFs that you might be holding in your portfolio, the overall indexes, commodities, the housing market, all of that stuff, and talk about how they all performed throughout the year. I'm also going to share with you the one investment that I talk about pretty often, where if you would have bought it a year ago, there is a possibility that you could have doubled your money throughout the year. All right, let's get to it. So just a quick disclosure, I'm not giving you any financial advice in this video. Any of the securities or stocks or investments that I talk about in this video, I am not recommending whatsoever. I don't know anything about you. I don't know what the right investment is for you. This is all just for educational purposes only. Also, make sure to head over to schoolofpersonalfinance.com, join my email list, get the free PDF download of the 15 numbers that you should be tracking in order to become great with money. Check out everything that I have going on the website over there. So now when it comes to investing, I am a big fan of diversification. Not only diversified stock portfolios or bond portfolios, but diversifying your assets, investing in many different asset classes. It is impossible to know what is going to perform the best from one year to the next. You might have a hunch, you might think that something is going to do great, but at the end of the day, nobody knows. So the best way to invest for the long term is to have your hands in everything, to be very well diversified. But now when you're diversified, that also means that every year you're going to have something in your portfolio that you don't like, that you wish that you didn't have. But that's just the result of being well diversified. So for 2021, that thing for me was gold. I own gold in my portfolio, and gold was negative throughout the year, and I wish that I didn't own it. And I wish that I owned more Bitcoin, for example, which had another very good year. But being well diversified, that's part of the game. You're always going to be unhappy with a piece of your portfolio because you just don't know what's going to do the best from one year to the next. And chasing winners, it is not a good strategy. If you go and you look at the best performances from the year before and you decide to invest all of your money into those, chances are you are going to have a pretty miserable year. There's actually a strategy out there called Dogs of the Dow, which is an older strategy where you go and you pick the worst stocks from the previous year, you invest in those, and you tend to outperform the market the following year. But at the end of the day, no matter what anybody says, nobody knows where the market's going, where specific stocks are going, where different investments are going. It's a very hard game to play. So being very well diversified, it makes a lot of sense to me. And another thing worth mentioning is if you are diversified and the stock market in general has a very good year, odds are you are going to underperform the market. And the reason for that is because you are probably going to hold some bonds or bond funds inside of your diversified portfolio. And when the stock market has a year like 2021 where it was up, 28% or so, odds are the bond market did not do well that year. So that is going to bring your performance down over the averages, but it's the opposite in other years. If the market is down big time, then you could actually outperform the market by having that bond piece or maybe that gold piece. So it's very hard to just go ahead and compare your performance to the overall market. So don't get discouraged if you see the market was up 28% and you were only up 22%. It's just a result of having a diversified portfolio. All right, so with that said, I'm going to go ahead and share my screen with you and show you the performances from some of the most popular index funds, ETFs, individual stocks, and commodities. So if we take a look right here, the S&P 500, I'm using the ETF version of it, which we could all invest in. The ticker symbol is SPY. So the SPY, it was up 28.75% in 2021. So that is a very solid year. And the S&P 500 was actually the outperformer of all the other indexes compared to the Dow Jones and the NASDAQ. So if we tack on here the Invesco QQQ, so this is another ETF that you could invest in where it invests in the top 100 technology stocks. So that was a very close second, 27.42%. So just imagine if you would have had all of your money in the S&P 500 fund and just called it a day, you would have had a great year. You would have almost made 30% for the year. And then the third one we'll compare it to is the Dow Jones Index. And we'll use the ETF for that as well. So the ticker symbol is DIA. So now the Dow Jones, you turn on CNBC, they tell you how the Dow Jones is doing. This is what that is tracking. And now that did 20.84%, so almost 21% in 2021. So that underperformed the S&P 500 and the NASDAQ. All right, and now let's throw in the Vanguard Mid-Cap Index. So this is an index fund of middle-sized companies. VIMAX is the ticker symbol. That was up 24.5% in 2021. So pretty good. So now let's throw in the Vanguard Small Cap Index Fund. For that one, that was up 17.73%. So as we can see here, that was the lowest performer out of all of these different indexes so far. All right, so now I'm going to add in the most popular index fund in the universe, and that is the Vanguard Total Stock Market Index Fund, VTSAX. So for that, the overall performance for 2021 was 25.7%, so almost 26%. Now this is one of those funds where many people just use that one fund in their portfolio and they set it and forget it and they just continuously add to it. It represents the total US stock market. There's over 4,000 stocks inside of that fund. People do use this as their only investment strategy. Now by doing that, it is more aggressive because you are 100% stocks, but people who are investing for the long term, they look at this as like it's just a simple way for me to go ahead and invest in the stock market for my future, and they're comfortable with the volatility of that. So now if we add in the largest bond ETF, the Vanguard Total Bond Market Index Fund. Now, bonds did not have a great year in 2021. So the overall performance for that fund was negative 1.86%. So now most people have bond exposure in their portfolio. So this would have brought down the overall return of your portfolio. And then the next one I wanted to add in is the Vanguard Total International Stock Market Index Fund. And that was at 8.62% for the year. So international stocks did not do nearly as well as the US stock market did in 2021. So if you have a very well diversified portfolio, you could have 3 funds, and many of the Vanguard target date retirement funds do have just these 3 funds in it. The Vanguard Total Stock Market Index Fund, the Vanguard Total Bond Market Index Fund, and the Vanguard Total International Stock Market Index Fund. Those 3 funds make up many of the Vanguard target date retirement funds. So if you're invested in one of those are the 3 funds you're invested in. So your performance, even though the US stock market did awesome, the other 2 would have dragged it down a little bit. All right, and then I'm just going to show you the performance of a few sector ETFs. So like the energy sector, for example, the past few years have not been great for the energy sector, but 2021, it came roaring back. It was up 53%. So that is a very big number. So imagine if you would have invested all your money in just the energy ETF, you could have been up 53% for the year. But nobody's going to do that. And a big part of that oil was up like 55% in 2021. Then if we look at the financial sector, so for the financial sector in 2021, it was up 34.8%. So a solid year from the financials in 2021. Now gold, I'll add on to here. This one, I mentioned earlier, it had a negative year, so it was down a little over 4% for 2021. So if you're a gold bug and you had no money in the stock market and you just kept all of your money in gold and cash for 2021, then you really missed out on a good year. And then the last one I'll add on here is Bitcoin. So now Bitcoin, we all know, is very volatile. It's been a crazy ride in Bitcoin. Over the last 10 years, it's been like the best performing asset class in existence. But for 2021, it was up 60%. So another crazy year for Bitcoin. All right, so now let's look at some individual stocks. I just put out some of the largest technology companies, some of the most popular names out there, along with a few of the meme stocks that had crazy rides throughout 2021. So the first one we're going to look at here is Apple. So Apple, another very solid year, so up a little bit over 33% for the year. Then if we look at Alphabet, Google had an unbelievable year this year, up 65% for the year. Microsoft, another outperformer this year, up 51% for the year. NVIDIA actually takes the cake. So this chip maker, they just had an unbelievable year, up 125% for the year. Now, Amazon was the worst performer out of these big tech companies in 2021, where it was only up 2.38%. So now just think about it. If you love Amazon, you've made a ton of money in Amazon, right? If all of your money has been invested in Amazon, you've done unbelievable. But in 2021, it was a flat year for you. So if you had all your money in Amazon, you missed out on the growth of technology in 2021, which is pretty crazy to think about. 2022, it could be the complete opposite. Amazon might outperform everything else. But this just shows another reason why you don't want to put all your eggs in one basket, and you want to be very well diversified. All right, so moving on here, Tesla, another big outperformer for the year. So Tesla was up just under 50% for 2021. Now, if we throw IBM in here, IBM used to be a crowd favorite. Back in the 80s and the 90s, IBM was such a great company to work for. The stock was great. Big Blue, they were a very popular company, but times have changed and they have not evolved with the technology. So IBM, it has not done great over the last few years. So finished 2021, it was up a little bit over 6%. So now Meta, this is Facebook. Facebook had another very solid year this year. So Facebook was up 23% in 2021. And that stock also, if you've been a long-time holder of Facebook since it came public, you have done very well with that stock. Netflix, another one, which has just been a great performer since its IPO, since it became public. That was up only 11% this year. So it did underperform the market and underperform the technology sector. So now if we look at AMC, AMC is one of those meme stocks that just was unbelievable, just a crazy ride, things that nobody would have ever thought could happen in 2021 with this. It happened. So as we could see, it ended up over 1,000% higher in 2021. Just craziness. And GameStop, the same type of thing. GameStop was up 687% in 2021. So just, you can't make this stuff up. It's just, craziness. All right, and then to wrap this up, I want to share with you the investment that I mentioned earlier, where if you would have bought this a year ago, you could have potentially doubled your money in a year. And that is something that I talk about all the time, and that's buying single family rental properties in the Midwest. Now, it doesn't have to be the Midwest, right? Real estate, it appreciated a lot all throughout the country this year. So like the average across the US was like 20% appreciation. So for example, if you would have bought a home, let's say in Kansas City, which has been one of my favorite markets, but let's say you bought a $200,000 home and you put 20% down. Now, if that price of the home went up 20% throughout the year, which many did in the Kansas City metro area, then that $200,000 home, it would be worth $240,000 a year later. Now, I'm simplifying this. I'm just using this for, educational purposes. I'm not suggesting that you invest in the Midwest or that you buy a house in Kansas City. But if you would have done this a year ago, that $200,000 house, it would be worth somewhere around $240,000 right now. So that $40,000 of growth, you would have only invested $40,000 to purchase that house. So yes, you would have had some closing costs and stuff, but you also would have had some positive cash flow throughout the year by renting that house. So 100% gain on that, which is crazy to think about. That is pretty much what happened in 2021, and not just in Kansas City. It could have been that way in other areas in Florida, in the Midwest, even on the West Coast, Seattle, Denver. I mean, the housing market has just been absolutely insane. And who knows if it will continue or if we'll have a downturn in the market. But that is just a simple example of how you could have made 100% investment on buying a single family rental property in 2021. Now, yes, if you try to sell it, it's not liquid. You'd have closing costs. You'd have to pay a realtor 5% commission. So I understand that it's not, an ideal example. But the truth is, the numbers don't lie. I mean, it really, that is a big gain on your investment by buying a rental property. All right, everyone, I hope that you found this helpful. Please make sure to hit that like button if you enjoyed this video. I'll see you again in the next video. Thanks.